recording financial information. Yes, this is our new topic in which we will be discussing types of transactions, cash and credit. We know very well that there are three sources of financial information. Number one, transaction. Number two, events. And number three, conditions. These three sources of financial information are in fact recorded in the books of accounts. But in this module, we would be focusing on transaction only. Normally, transaction we do in our day-to-day life, and very easy to understand as well for the beginners. That's why we would be focusing on transaction first. So first of all, we know that there are two types of transactions. One is cash transaction and the second one is credit transaction. Cash transaction, most of us, we do these transactions on our daily basis while buying our food, buying cloth, making payment for our tuition fee, and so many other transactions. We know very well that transaction is a dealing between two persons. So when that dealing is based on cash, it is a cash transaction. So here we must concentrate on the concept that we are accountant of an entity and focusing on the cash transaction of an entity. Where an entity is dealing with the people based on cash. Its example are cash received from customers, cash paid to suppliers. Entity is making payment in cash to its suppliers. Entity is making payment in cash for staff salaries. An entity is making payment for any reason through check, through cash, or standing order, or direct debit, or debit card, or demand drafts. So all these are the cash transactions. Or the entity is collecting or receiving cash through check, through credit transfers, or directly deposits in the bank. So cash transactions mean a transaction in which settlement of the transaction in terms of cash or cash equivalent is happening at the same time. Whereas in credit transaction, payment in terms of cash or cash equivalent is deferred. So the transaction on account is a credit transaction in which entity buys goods or services or entity sells its goods or services. But cash payment or cash collection is not taking place at the same time, whereas exchange of invoice is there. You might witness any transaction in your daily life in which supposedly you have bought your food from a restaurant and asked for a credit of a day or two or a week, that you will make payment for that food after a week. So buying food today is a credit transaction. Making its payment after a week is a cash transaction. So its example include sales of goods on credit, purchase of goods on credit, return of goods from customers, and return of goods to suppliers. Important tips to remember. Cash transaction is about cash inflow and cash outflow. If you have cash inflow or cash outflow, it's a cash transaction. Credit transaction is about deferment of cash flows. Cash is not involved, but yes, transaction is there. The entity has either purchased goods or services, or the entity has sold its goods or services without making payment or collecting cash. Thank you.